This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending January 2nd, 2021. Our question this week is, what were the top stocks in the S&P 500 in 2020? The answer will be provided later in the video. This week the market was higher. Actually, the Dow Jones Industrial Average and the S&P 500 closed at record highs this past week. The Dow Jones Industrial Average increased 0.65% on Thursday and was up 1.35% for the week. The S&P 500 increased 0.64% on Thursday and was up 1.43% for the week. The Nasdaq increased 0.14% on Thursday and was up 0.65% for the week. Looking at the week, we can see that there were 9 up finishes versus 3 down finishes for the indexes. On Monday, Wednesday, and Thursday, all the major indexes were up. On Tuesday, they were all down. The market was closed on Friday. The new unemployment claims were 787,000 versus 828,000 expected. That was a drop of 19,000 claims. The president signed the coronavirus and the government spending bill. The House passed a bill for $2,000 stimulus checks, but the Senate Majority Leader Mitch McConnell is against the bill. U.S. home prices rose at the fastest pace in 6 years, and the Senate overrode the president's veto of the $740 billion defense bill. New unemployment claims, presidential approved spending bills, House passed bills, Senate rejected bills, home price increases, and presidential veto overrides are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, that is big banks, big corporations, the president, and the Congress. These 5 entities will do what they must to drive the market higher. Notice on Monday, after it was reported that the president signed the stimulus and spending bill, how the market went up. Which brings us to our question of the week. What were the top stocks in the S&P 500 in 2020? Well, here they are. You can see Tesla is at the head of the list, and it was actually a late addition to the S&P 500. You can see some of the other big companies there. Will these companies continue to lead the S&P 500 in 2021? Do you own any of them? Will you invest in any of them in 2021? Or do you own any stocks at all? If not, why not? Are you afraid that the market may fall again? The market will fall again at some point. But this past year, despite the pandemic, the market has reached all-time highs. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list from the week ending January 2nd, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Grayscale Bitcoin Trust, ticker symbol GBTC. It's in the second column. It increased 17% for the week, though it was down a minus 2.74% on Thursday. It is the third time in a month that Grayscale has been the top performer on my list. Grayscale is an investment vehicle or ETF that enables investors to gain access and exposure to the price movement of Bitcoin without actually buying, storing, or safekeeping Bitcoin directly. Looking at a summary of results, you can see that Grayscale has increased more than 290% in 2020. I have Grayscale. I bought some a few weeks ago to get exposure to the Bitcoin price movement. It is not a cash flow trade. I cannot generate cash flow from it because it does not have options. I use it as an indirect investment in Bitcoin. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 Index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio did outperform the S&P 500 Index ETF SPY in 2020. The Southside Portfolio was up 21.74% versus 15.92% for SPY, a difference of 5.83%. The Southside beat SPY by 5.83%. The Southside Portfolio had a more than 13% lead going into the final couple of weeks of the year, but the Christmas rally saw SPY make substantial gains against the Southside Portfolio. This week, equities, including puts, calls, and ETFs, make up 71.99% of the portfolio, while cash is 18.01%. The cash flow generated for this past week was 1.63% of the portfolio account value. The account value changed by minus 1.96%. Meanwhile, the S&P 500 ETF SPY changed by plus 1.41% this past week. I sold option contracts on 6 positions this week, 5 calls and 1 put that range from $104.35 to $903.35. I received a cash dividend of $272. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the southsideschooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales. How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia. Available on lulu.com and amazon.com. Please like, share, subscribe. ADOS.